Good morning this Monday, the 19th of February. I'm Grady Wolf, market analyst with Bell Ranked. Wall Street ended a 5-week winning streak across the key indices on Friday, with the Dow Jones retreating more than 100 points as investors reassess the outlook for the Fed to cut rates, with anticipation that rate cuts will come later than first expected. The S&P 500 fell almost 0.5% on Friday, while the tech-heavy Nasdaq declined 0.82%. For the week, the key indices each posted their first loss in 5 weeks, with the Dow Jones losing 0.11%, the S&P 500 shedding 0.42%, and the Nasdaq declining 1.34%. Stronger than expected producer price index data in the US drove investor concerns for later rate cuts, as the PPI reading for January showed wholesale inflation rose 0.3%, where economists were polling a 0.1% gain. The 10-year Treasury Yield also rose to 4.3% on Friday, which added to investors hitting the sell button on equities in favour of safer returns through government bonds. Over in Europe, it was a different story on Friday, with the key markets closing the last trading session of the week higher, prompted by strong economic data indicating resilience in some markets despite that high interest rate environment. The Stoxx 600 rose 0.6% on Friday. Germany's DAX added 0.42%. The French CAC closed 0.32% higher, and in the UK, the FTSE 100 had the biggest gain of them all, adding 1.5%. The strength in the UK on Friday was driven by retail sales coming in at month-on-month growth of 3.4% for January, which was more than double what economists were expecting, and follows a record decline in sales in December. Across the markets in Asia on Friday, Hong Kong's Hang Seng led the gains across the Asia markets, with the key index rising 2.41%, while mainland Chinese markets remain closed for the Lunar New Year holidays. Japan's Nikkei hit a fresh 34-year high, and investors in the region awaited the release of Singapore's 2024 budget, which came out later on Friday. Locally on Friday, the ASX 200 rose 0.7% and climbed 0.2% for the week, boosted by Australia's resources sector, as weakness in the US dollar fueled a rally for gold, oil and iron ore prices. GQG Partners was one of the top performing stocks locally on Friday, after the boutique investment manager reported it has already raised a further $2.9 billion in the first 6 weeks of 2024, while QBE and IAG insurers both fell out of favour with investors on Friday after missing analysts' expectations in the first half. Ahead of the first trading session of the new trading week, the SPI futures are expecting the ASX to open Monday's session up 0.11%, tracking gains on Wall Street from Friday. On the commodities front this morning, oil is trading 1.5% higher at $79.19 a barrel. Gold is up 0.45% at $2,013 an ounce, and iron ore is flat at $128 a tonne. One Aussie dollar is buying 65 US cents, 98.08 Japanese yen, 51.84 British pence, and 1 New Zealand dollar and 7 cents. And now let's dive into some trading ideas for your consideration today. Bell Potter has increased the rating on Whitehaven Coal from a sell to a hold rating and maintained the 12-month price target of $7.65 per share following the release of the company's first half results, including most metrics meeting Bell Potter estimates, and the company also announcing a surprise 7 cents per share dividend. The company will also soon become the operator of large Queensland met coal assets, positively shifting the company's commodity exposure and risk profile. And Trading Central has identified a bullish signal on Pilbara Minerals following the formation of a pattern over a period of 21 days, which is roughly the same amount of time the share price may rise, from the close of $3.71 to the range of $4.06 to $4.14, according to standard principles of technical analysis. And that's all we have time for this morning. Have a wonderful Monday, and as always, happy investing.